Hello and welcome to the Seaspray Private Investment View and Outlook Q1 2026. My name is Cathal Levin, Investment Market Research Analyst with Seaspray Private. Before we look ahead to Q2, let's take a quick look back at the first quarter. In our 2026 Investment View and Outlook, we highlighted two key G forces that we expected to shape global markets this year: growth and geopolitics. During the first quarter of 2026, markets have very much been dominated by the latter. Conflict in the Middle East, which began in early March, has weighed heavily on markets and will continue to do so, even if an agreement is reached between the United States and Iran. We can see the impact clearly when we look at financial markets. Despite a generally positive start to the year in January and in February, both US and European markets finished the quarter down between 3% and 8%. Asian markets fared slightly better, with Japan's Nikkei 225 ending just above par, while China's Shanghai Composite fell by just over 1%. Overall, the MSCI World Index declined by about 5% during Q1, despite being more than 2% higher in the days leading up to the conflict in the Middle East. In short, the first quarter of 2026 will likely be remembered as a particularly volatile period, perhaps even a turning point in international affairs. With that in mind, let's turn our attention to the outlook for the second quarter of 2026. While growth and geopolitics remain central themes for global markets, the second quarter, and indeed the remainder of the year, will also be shaped by what we might call the dual I's factors: inflation and interest rates. Conflict in the Middle East will likely have repercussions for global inflation, regardless of when it ends. According to the latest OECD projections from late March, inflation across the G20 is expected to average around 4% in 2026. This represents an increase of 1.2 percentage points compared with the projections made in December 2025. Looking at the largest economies within the G20, inflation in the United States is now estimated to average 4.2% in 2026, again 1.2 percentage points higher than previously expected. Now, this could prove particularly significant with the US midterm elections approaching in November. In Europe, inflation is now expected to average 2.6%, almost 1 percentage point higher than the December forecast. These projections assume that oil and gas prices do not rise further from their current peaks. If they do, both inflation and economic growth could be affected more severely. In fact, the OECD estimates that a prolonged disruption to global energy shipments could result in a 0.8% contraction in global real GDP over 2 years, while consumer prices could rise by an additional 1.6% on top of current forecasts. Now, while inflation is expected to rise globally, one of the key knock-on effects is on interest rates. In our original 2026 outlook, we suggested that monetary policy would continue to loosen this year, albeit at a slower pace than in previous years. However, global events have shifted expectations considerably. At the end of February, markets were pricing in almost a 50% probability of a rate cut at the July meeting of the Federal Open Market Committee. However, at the time of recording, there is now a 92% probability that rates will remain at their current levels at that meeting. While this change in sentiment may dampen the broader market outlook for 2026, there are currently no strong expectations that US interest rates will rise further. In Europe and the UK, the outlook is broadly similar, with no rate cuts currently expected. Turning away from the macro environment, one bright spot in the first quarter has been corporate earnings. Despite ongoing concerns around AI investment and its wider impact on industries, technology companies delivered particularly strong earnings growth. The information technology, or IT sector, recorded earnings growth of 33%, the strongest of any S&P 500 sector, while the S&P 500 overall reported 14% earnings growth. This reinforces the idea that, even amid market volatility, corporate fundamentals remain relatively strong as we move into the second quarter. Looking ahead, artificial intelligence and clean technology stand out as two areas of potential opportunity. In the AI sector, demand remains robust despite concerns around data center spending. NVIDIA, for example, estimates that demand for its artificial intelligence products could reach $1 trillion by the end of 2027, double its previous 2026 estimate. We are also seeing continued industry consolidation and deal-making, with partnerships forming across robotics, cloud and software sectors. During Q1, Meta agreed a multi-billion-dollar partnership with AMD, which will manufacture customized chips for the company. Turning to clean technologies, the global impact of renewable energy continues to grow. According to the Clean Investment Monitor, global investment in clean technologies reached $1.96 trillion in 2025, with $1.81 trillion directed towards electric power and transport, including electric vehicles. This investment is already delivering tangible results. In China, for example, total emissions fell by 0.3% in 2025, with clean energy providing 40% of the country's electricity. Closer to home in Ireland, wind and solar power have reduced the carbon costs associated with electricity generation by more than €1 billion, while avoiding over 5 million tonnes of carbon dioxide emissions. To conclude, the first quarter of 2026 has been marked by significant volatility. With the situation in the Middle East continuing to evolve, predicting where global economies will stand by year-end remains challenging. However, it is during periods like this that investors are often tested the most. Patience and a long-term investment horizon remain key to navigating periods of market uncertainty. As the saying goes, time in the market is generally more valuable than trying to time the market. Thank you for watching our Q1 2026 Investment Review and Outlook. To stay ahead of the curve, you can follow Seaspray Making Waves, our quarterly financial outlook series, available on YouTube, LinkedIn, Spotify, iTunes, and via our website at www.seasprayprivate.ie. You can also subscribe for free to our weekly market review, written by myself and published every Monday morning on the RT business page. And remember, stay tuned and stay invested.